Hello again, everybody, and welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton, and if this is the first time that you're joining me, and it's been a couple of weeks, I've actually been on vacation, and I, in fact, just got back from vacation this very day, and I decided that it has been 2 weeks since I've spoken with you, and I'm way overdue to get a Forex Market Preview video out to you. So here I am, ready to do my job and fulfill my responsibility to you guys and get you some quality content out to talk about what I think is going to be happening over the course of this next week. Now, as you know, what we do here on the Forex Market Preview is we take a look at some ideas of stuff that's going to be happening into next week. And I have done a little bit of change up here in the last few sessions. And what I'm trying to do is really hone in and focus on one or two currency pairs and then really teach you a little bit about the analysis. So people tend to, rather than me just glazing over 8 or 10 pairs, that I actually drill down onto a couple of them that I think have some good structure and some good analysis, and then actually run through and kind of try and explain a little bit about what I'm talking about and what I'm analyzing when I'm actually doing it. And so today what we're going to do is we're going to take a look at the euro dollar, we'll take a look at the pound dollar, and then I've got euro New Zealand that is kind of setting up something pretty interesting, and so I'll show you that as well. Now, let's switch over and have a look at the charts here. And for the sake of time, I'm using a little different recording method that hopefully is going to speed up my recording time. And if it ends up coming out really well, then we'll do it again. And if it comes out looking like junk, then we won't. But what I've got here is Euro USD on the weekly chart. Now, normally we don't go as high as the weekly chart. I try and stay on that daily chart, but there's nothing wrong with going up here another level and taking a look at, hey, what's happening on those higher time frames? Because again, the more significant structure exists, the higher the time frame you go. So a structure level on a 5-minute chart is not going to have as much relevance as a structure level on a weekly chart. And that's not entirely true to say that. What is true to say is that based on the higher the time frame, the more significant the structure. For example, if this level here that the market came into is going to be a rather significant structure level here and here. Reason being is because this is on a weekly chart, the market held that structure. And versus a 5-minute chart, which a market may come in and out of structure several times on a 5-minute chart. That doesn't mean, and I know I'm going to get questions about this, so let me just attack them right now. That does not mean that structure on a 5-minute chart doesn't matter. We trade, if you're in Akil's live room every single day, you'll notice that there is structure there every single day that we're trading. And I'm sorry if there's a buzzing going. If you guys can hear that on the thing, I'm sorry. I have a security system, a rather elaborate security system here at my home, and every time a door opens in the house, it's like everybody knows it because I've got many floors here, and so it'd be very easy without a security system. It'd be very difficult to actually be aware of what's going on inside the house. So, but I've got this beeping going, so I apologize if that's bothering you. But what I want you to, so what I'm saying is don't look at that, because I know some people, I get a lot of questions about what's the best time frame. There is no best time frame. There's only time frames. And when you're trading on shorter time frames, those pops, those moves will be shorter. You don't want to look for key structure on a 5-minute chart for a 100-pip move. But you might want to look for a key structure level on a 5-minute chart for a 15-pip move. So that's what we want to be careful of and just be aware of. But if you look here, we've had a nice downward move, a little retracement. If I bring in my Fibonacci extension level, let me just draw it in for you guys first. So we get this downward move, then a little retracement. Bring in the Fibonacci retracement tool. I go swing high to swing low of that move. I can see I pressed right up into the 382 retracement. Now, for some of you, you'll recognize this is actually a trend continuation trade. And if I remove this 382 retracement, I'm going to tell you to do one thing. What do I always say? Look left, structure leaves clues. So I'm going to grab my little line tool here. I'm going to drop that line tool in right here on this previous structure level, and look where that market came back into. Came right back into that structure level looking left. Now, again, we're on a weekly chart. We're on a very high time frame, so this is just really bird's eye. This is 30,000 foot view type of stuff. But look at where that 382 comes in. 382 lining up on structure. When the market resists that, when the market is repelled by that 382, it's a very good indication of a potential trend continuation trade. When we have the structure on top of that, it even provides us more evidence. And we know based on that, what are we looking for? Well, roughly a 127 extension of that move. So I'm going to grab my Fibonacci extension tool, and I'm going to use the same leg. I'm going to go swing high to swing low and back down in. And what you're going to notice is that 127 extension coming in right at that structure level, and now market putting in the hanging man candle, is a doji candle here, whatever you want to call it. A very nice reversal style candle setting up right here with the expectation that this market is going to rally out of here. So as we take a look at that, we now have this analysis set up. We know where the structure level was on the weekly chart. We can drop down to that daily chart. We can find out, okay, what's the underlying trend? Where are we at here? And what's been happening most recently? Well, the market came down in to that lower level and actually popped out of there. Now, if you've been following me on TradingView, these charts are actually provided by TradingView, and you can download them for free, or you can get their upgraded version for about $20 a month. You are not going to find a better charting package cheaper than TradingView. And in my humble opinion, having used almost all of the charting software available, you are not going to find a better charting package, web-based charting package, period. There are other charting packages that are good for other things. For example, multi-charts or TradeStation are good if you're doing a lot of systems development and some of that type of stuff. If you're running algorithmic stuff that you need a little beefier thing for. But you take these charts with you everywhere. You can log in on any computer. It saves your information. You've got a whole back office there. You can share charts with other people and other traders. It's really a nice product, and it's for $20 a month, you're just not going to get a better deal. My handle, if you are on TradingView and you would like to follow me, is Jason_Stapleton. So if you would like to follow me, I try and post, say, a chart a day or something like that, typically just to give an idea out there. Some of them are really good ideas, and some of them are really bad ideas. But I make my best play, and I try and figure out what I think is going to be a decent chart to look at for the day, and I post that out to all of you. So feel free to follow me on there. I'd love to have you as a follower, and don't forget to subscribe to TradingView because they've put out a really good package here, and we want to support them. There's also another pattern in here as well. I'm just going to draw it in. I'm not going to walk you through it, but this is one I actually put out on TradingView and identified for everybody. Right down in here into this 127 extension. Now, what we're actually looking for on this pattern is a 1618 inversion of the X to A leg. But look at that symmetry. 1618. Did you guys see that when I drew that in? You might need to watch it again. I'm bringing my Fibonacci tool back up in there, and look at where that 1618 lays. 1618 lying up at 127 extension of the weekly chart. This is called a crab pattern formation, lining up right there. And we know, based on looking left, and if we go to the weekly chart, you'll see it a little bit better. Let's go back out to our weekly chart. Look left. Look at the structure level that exists right in here. And I actually outlined on the daily chart, because we get a little bit better shot of it on the daily chart here in terms of where that structure actually lays in. I drew it out on the chart to look something like this. And I just said the low to the close there. That is about where our reversal point should come in at. I said if you're looking for a place, the blue box here is where we're likely to see the reversal. And sure enough, the market came down in initially, rallied up, then came back down, and now has rallied up again. And I think there is a very good chance, based on where we closed on the weekly chart, that we're going to see continued momentum up. Now, where to is the question. Where is it going to go? Well, again, let's delete some of our analysis here, and let's just deal again with basic structure. Okay? Look left. Structure leaves clues. Here's the most recent structure level looking left. So I'm going to grab my line tool. I like to drop these in right at the lowest close. So there's the lowest close. And then if you want to bracket out a potential reversal zone, or what I call a kill zone, you can do so just by taking the lowest low and going up to the lowest close. So we'd be looking at a range for targets somewhere between 35.11 and 35.30s. Now there is another way to do it. You can bring in a Fibonacci retracement tool, go swing high to swing low, and you can say, all right, I'm going to cover half of my position here at the 382 and half at the 618. That's the traditional way that we would cover an advanced pattern. The difference on this is I don't trade crab patterns, and so I would have to base this purely off of structure, which I can do that by using the weekly chart and the candle pattern there, combined with the structure analysis and the 127 extension, the Fibonacci and ratio analysis stuff as well. So that's going to do it for Euro USD. Now I'm going to skip the pound for right now. I'll cover that in the Syndicate this week. And if you are not a Syndicate member, actually I want to show you guys something really cool. So stick around because I'm going to show you what's going on with the Syndicate. This is actually really unique. Let's jump out to the weekly chart. Look at what's happening. It's not unique, but it's cool. So Euro New Zealand, boom, all the way up. Look left at this structure level. Look at that weekly structure. Boom. Okay. Let's bring in Fibonacci retracement. Let's go swing. We can do several different ones here. So this gives us nothing. This swing high here, it's going to give us about a 50%, and that bigger one's going to give us nothing as well. So we don't have really, we've got a 50% in there, but that's not one of the ones that I would look at in terms of reversal pattern stuff. So we're above the 382 at about the 50% coming in at structure. We drop down to the daily chart, and we see we had a burst of energy here right towards the end, but look left, here's that same structure level. Okay, we're still right up against it. We haven't violated that. We haven't even violated the absolute highs of this little channel here. And if I go down to the hourly time frame, which would be my trading time frame, the time frame I would execute my trades on, I have a potential shot here. I mean, it doesn't get much better than where the market sits currently. You can get stops above the swing high here at 58.66. You're looking to go short at 58.34s if the market opens right there. And you got a shot. I mean, it's worth, in my opinion, throwing a little bit of money at. In the sense that, hey, the risk is limited and the upside potential, I mean, if we go back out to this daily chart and you're looking at this as a potential swing trade, well, we could see a move down to 56.70s. Or potentially all the way down here to 55.90s, 5600s. So there's a significant potential reward here. Let me just grab the short position trade. Let's assume that we shorted it here at the market. Okay? Our risk is going to be somewhere around here, and here is our potential reward. Guys, that's a pretty awesome test. You don't have to be right very much of the time in order for that to make a whole lot of sense. You could even tighten this up and say, you know what, Jason, I don't even want to get that aggressive with it. I just want to go right here to this previous structure level. Well, that only gives you a 3-to-1 risk-reward profile. What does it say here? It should say what the risk. Yeah, 3-point risk-reward is 3-to-1 on this particular trade. Man, nothing wrong with that. That's a great opportunity. So Euro New Zealand. Now this is opposed to, because we're betting on the euro strengthening on euro dollar, and we're betting on the euro weakening euro New Zealand. And I got an interesting question from a guy. When I posted some trades out on TradingView, he said, well, one of your trades conflicts with the other one because you're short the euro, long euro dollar and short pound dollar. And those are two opposing dollar positions. So should I cancel one and open the other? And I said, no, I trade each of them independently. And that is absolutely what I would recommend to you. Is correlations do exist. They're absolutely something that exists in a market. They fluctuate from time to time on how well they correlate or whether they correlate at all. Correlations also change based on the time frame that you trade. So if you're trading one time frame, you might get one correlation, and if you trade another time frame, the correlation may be totally different. And they may correlate really well on a lower time frame for a short period of time, but on a higher time frame, they don't correlate at all. And so look at each individual trade, make a plan, and then trade that plan. Now, I want to show you something else. Hang on just 1 second. Let me pull this up. Okay, so check this out. This is going to be, me save my password here because I just logged in on this computer. This is going to be the new home of the Syndicate. And this is not going to replace right now the trade floor software, because we're working on that. What we're going to probably do is integrate that into this little this deal here, so that you can get those regular updates, the positions that I'm in, when I enter, when I exit trades, what the stuff Akil is watching, all of that. But this is going to be a place. I told you guys who are in the Syndicate that I'm putting together a training course. It's going to be included with your first month's subscription. So after 1 month, you know, all you get, it's a subscription of $49, and this is going to be the training course that we're going to put out with the Syndicate, and you're going to get I mean, guys, this course is going to be worth hundreds of dollars. It's going to be great content for you on how to get your plan in place, how to get set up. I get lots of questions about what broker to use, about what charting packages are out there, and what charting software I should use. We're going to talk about triaging your trading and how to, you know, really how to set yourself up for success even after you've met loss after loss. I'm going to teach you a lot about structure analysis, about technical analysis in there, about Fibonacci and ratio analysis is all going to be in this course, and it's going to be available to every single Syndicate member for as long as you're a member. We're also got in here, this is the Syndicate War Room, which is where I do a live video every single morning. This is me from, this was last Thursday or Wednesday, where we did that. And then you also have the upcoming news. We've got the news embed, so you can see what the major news events are going to be for the day. If you'd like to do a little bit of charting, we've got a embedded chart from TradingView that's in here as well, so you can go ahead and take a look at what's going on, and this actually pops out as well if you wanted to have just a pop-out version of this, and then you can manipulate it as you need to. And that's going to be available for you guys on here as well. All of Akil's video updates are going to be available on here, so you can log in and see those every single day. And we're even going to start a little forum, assuming it doesn't get out of hand. I talk down forums so much that for the most part, people don't even go in here. But we're going to have it up as well, just so that you can have some chance to get some questions answered and to basically have a little bit of a community here for all the Syndicate members. This is just what Darren has put together in the last couple of days. So this course, I'm going to be releasing content as I record it. You're not going to have to wait for the whole course to come out. So I'm going to be putting out these videos, and I'm going to start recording them, I'm hoping this week, and just start slowly putting them out as I get done recording them. And so I am very, very excited about this. It's going to be a great place for all of us to be. And you know, if you guys are not members of the Syndicate, you need to be members of the Syndicate. It's the cheapest thing that you're ever going to do. You're going to get the full training course that'll come with it, and I would just invite you to subscribe. You can do so by just clicking on that link right there. We'll take you to the page, which will explain it all to you. I'm not going to bother to do that now, but this is something that is going to be an integral part of what we do moving forward. And so this is going to be, this is kind of the nuts and bolts. I'm trying to set it up the same way a hedge fund or a proprietary trading firm would set up their morning, which what typically happens in a place like that on a prop shop or proprietary trading floor is in the morning before the markets open. Everybody meets in the room together. They all talk about the trades that are going to be going on, what currency pairs or what stocks are in play that day, and what their best trading ideas are. And then they all go back to their respective desks and they trade that day based off of, you know, their best skill and ability and the information that they all shared in the morning update, in the morning boardroom. So what I've done is I've created the War Room. And if you have a look here, and the War Room is really nothing more than me coming in every single morning and giving you what I think are the best trading opportunities of the day. I also tell you throughout the day what I'm trading, what positions I'm in, when I enter, when I exit. Akil posts his pattern trades from from his live trading room in there as well, and so you get a very nice a lot of information throughout the trading day about what's going on and what we're doing. So it's a chance for you to kind of look over my shoulder, to look over Akil's shoulder, and be part of what we're doing. So if you want to do that, go ahead and sign up. It's really the best thing we got going. So I will talk to you guys next week. Until then, good luck and good trading. See you soon.